Why does losing just $100 in trading feel like a punch straight to the gut, while winning the exact same amount feels like pocket change? It's psychological. Welcome to Stick Trader Mind, your home for trading psychology that actually makes sense and doesn't bore you to sleep. In fact, behavioral finance research shows that the pain of losing is twice as powerful as the pleasure of winning. And in trading, that tiny imbalance can cost a lot. It's called loss aversion bias. And unless you learn to control it, it will control you. Think about it. A trader takes a small win and shrugs it off, but the moment they face a loss, their brain sets off alarm bells. Suddenly, logic disappears, and emotions take over. This is where fear, panic, and revenge trading are born. And here's the shocking part. Loss aversion doesn't just affect beginners. Even experienced day traders, swing traders, and institutional investors fall victim to this bias. That's why so many retail accounts blow up. Not because of a lack of strategy, but because of unchecked psychology. Today, we're pulling back the curtain on the most destructive bias in the markets. By the end of this video, you'll see losses in a completely different light. And once you master this, you'll realize that profitable trading isn't about your P&L sheet. It's about mastering your mind. So buckle up, because what you're about to learn could be the difference between becoming a consistently profitable trader or staying stuck in fear and frustration forever. Every trader's story starts the same way: excitement, adrenaline, and the rush of that very first win. You click buy, the market moves in your favor, and just like that, you're hooked. For a brief moment, it feels like you've cracked the code to Wall Street. The profits are small, but the dopamine hit? Massive. This is the honeymoon phase of trading, the illusion that success is guaranteed. But then, it happens. The first real loss. Not a demo account loss. Not paper trading. Real money gone. And suddenly, the entire psychology shifts. What was once fun and exciting now feels dangerous, heavy, and painfully real. This is where loss aversion bias begins. The trader starts to panic, staring at the red numbers on the screen as if they're a personal attack. That one losing trade feels bigger than all the wins that came before it combined. And here's the trap. Instead of calmly accepting the loss, the trader reacts emotionally. Revenge trading kicks in. The urge to make the money back immediately overrides logic, risk management, and discipline. The same trader who once followed a strategy now jumps into random positions, chasing the market, desperate to erase the loss from their P&L sheet. And the irony? This panic-driven decision-making usually leads to even bigger losses. It's at this stage that trading accounts start to look less like investment portfolios and more like villain origin stories. Small wins disappear, risk increases, and confidence crumbles. The trader who once felt unstoppable now questions everything. Am I cut out for this? Is the market rigged against me? Why does it feel like I can't win? The problem isn't the market. The problem isn't the strategy. The problem is psychology. Loss aversion bias has taken control, turning what should be a numbers game into an emotional battlefield. And until the trader learns to separate emotion from execution, they'll stay trapped, winning small, losing big, and slowly draining their account balance, one emotional decision at a time. This is where the problem grows into something much bigger. The trader doesn't just take one loss. It starts small. They close a winning trade too early, afraid the market might turn against them. That tiny profit feels safe, but deep down, they know they left money on the table. Then, when faced with a losing trade, the exact opposite happens. They hold on far too long, hoping the market will magically reverse. They refuse to take the loss. And what was once a manageable setback turns into a devastating blow to their trading account. This repeats again and again. Wins are cut short, losses are stretched out, and slowly the account balance begins to shrink. What's happening here isn't a lack of strategy. It's the direct influence of loss aversion bias, a principle of behavioral finance that shows just how irrational human decision-making can be. Think of it like this. Loss aversion is like eating a blazing hot pepper. You'll forget the taste of the dish, but you'll remember the burn for hours. The brain is hardwired to exaggerate pain. And in the world of day trading, Forex trading, and stock investing, that wiring is disastrous. The irony? Even when traders know their edge, know their system, and understand risk management, their brain still tricks them into sabotaging their results. They become prisoners of their own psychology. The pain of one red trade is magnified to the point where they'll do almost anything to avoid it. This is why so many retail traders blow their accounts. It's not because they lack technical analysis, candlestick patterns, or market knowledge. It's because market psychology has overpowered them. Loss aversion turns rational investors into emotional newbies. Instead of executing their trading plan, they start fighting the market, convinced they can win back what was lost. But the market rewards discipline, not desperation. And as losses compound, something else creeps in. Fear. Fear of pulling the trigger on the next trade. Fear of missing out on the next big move. Fear of being wrong again. The trader who once saw opportunity everywhere now sees danger in every candle. Paralysis sets in. And here's the tragedy. While they're frozen by fear, the market continues moving, generating opportunities they'll never take. This is the psychological trap of trading, cutting winners short, letting losers run, and repeating the cycle until the account is drained. It's not strategy failure. It's human nature working against itself. In the world of trading, the charts aren't the battlefield. The mind is. And until a trader learns how to overcome this bias, no amount of trading systems or financial education will save them. Loss aversion is the invisible hand guiding them towards self-destruction. After enough pain, after enough sleepless nights staring at charts, the trader finally realizes something profound. Losses are not personal. They are not proof of failure. They are not a reflection of intelligence. They are simply part of the business of trading, just numbers on a screen. The trader begins to detach emotionally. For the first time, they stop seeing a losing trade as an attack on their identity, and they start seeing it as nothing more than a cost of doing business, like rent, electricity, or any other operating expense. This shift is everything. With this new mindset, the trader accepts two undeniable truths. First, a loss does not mean you were wrong. It means you were following your edge in the market, and this time the probability didn't play out. That's all. Second, losing is guaranteed. No matter how good you become at day trading, swing trading, or Forex investing, losses will always be there. The job is not to avoid them. It's to manage them, to make sure they stay smaller than your wins. This is the moment where psychology transforms. Instead of chasing revenge trades, the trader now cuts losses quickly. Instead of panicking, they respect their stop-loss. Instead of gambling, they execute their plan with discipline. Slowly but surely, the fear begins to fade. For the first time, the trader experiences freedom. Freedom from the emotional roller coaster. Freedom from the constant stress of red trades. Freedom from second-guessing every click of the mouse. They begin to understand that profitable trading isn't about avoiding pain. It's about mastering it. Visually, it's a dramatic shift. Imagine a trader calmly closing a losing trade, then walking away with complete confidence, knowing that this small loss is irrelevant compared to the bigger picture. That calmness, that discipline, that emotional control, that is the turning point every successful trader must reach. This is where trading psychology and risk management merge into true mastery. It's the transition from being ruled by fear and greed to becoming a professional, disciplined market participant. And once this mental shift is locked in, the trader's results begin to change forever. In the end, trading success isn't about predicting the market, it's about mastering yourself. Once you understand the trap of loss aversion bias, the game changes forever. Treat your losses like business expenses. Just as every successful company budgets for costs, every profitable trader budgets for losses. They aren't failures, they're operating costs. The only thing that matters is keeping those costs smaller than the profits. Focus on execution, not outcome. Great traders know they cannot control the market, but they can control their decisions. They don't measure success trade by trade, they measure it over weeks, months, and years. This is the secret to consistent profits in Forex trading, stock investing, or crypto markets. Follow your method with 100% consistency. Discipline is the ultimate edge. The trader who executes their plan without hesitation outperforms the trader who constantly second-guesses, even if their system is less sophisticated. Psychology beats prediction every time. And here's the truth. Once you adopt this mindset, loss aversion bias simply disappears. Winning and losing no longer control your emotions, because both are part of the same process. Following your method, managing your risk, and letting probabilities play out over time. That's the moment trading becomes sustainable, scalable, and truly profitable. Picture it. The trader who once panicked at every red candle now calmly executes their trades with precision. They're no longer chained to their P&L sheet. Instead, they're free. Free to build wealth, free to scale their trading account, free to treat the market like a business instead of a casino. This is where consistency is born. So here's the challenge to you, the viewer. Will you continue the cycle of cutting winners short and letting losers run? Or will you finally take control and trade like a professional? If this resonates with you, drop a comment below and share your story. Tell us, what hurts more, losing money or missing out on a big win? I read every comment, and I want to hear from you. And if you found value in this, do me a favor, hit that like button, subscribe for more insights on trading psychology, risk management, and profitable systems, and share this with another trader who needs to hear it. Because at the end of the day, trading is not just about candlestick patterns or market analysis. It's about mastering the one thing you truly control, your mindset. And when you conquer that, profits follow.